All right, so welcome to the order flow video. We're going to look at how to actually execute trades. We're going to read momentum and directional intent when it comes to taking a trade. Here's our little checklist, okay? So we're going to look out for our high time frame bias using liquidity. Then we're going to identify all of our confluences on the lower time frame, looking to then confirm our trade with that fair value gap, and as well as our form of managing risk, which I will go ahead and show you. And then we execute our trade, okay? So we're looking for strong displacements to form those fair value gaps, right? And we want to make sure we're only taking a trade when we see that directional bias, when we have that insider information, which will be that intent for the direction, right? So we want to make sure we have an idea of where market is going before we even take a trade, right? And then after we get that intent, we want to make sure we're using our confluences to identify an actual model, an actual setup like this right here. And more betterly, the one that we actually execute upon in the morning, right? All these confluences causing us to actually take the trade within the time window, within the New York AM session, after blah, 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 blah. That is how trading works, right? All these things are coming together, stacking upon each other to then allow us to execute on a position, okay? Cool. So now we're going to have the full walkthrough. We're going to understand how we go from bias to hitting TP. I've already showed it to you in a little bit, but this was before a lot of these other things got put on our chart. So now let's run through it in general, right? First step is our daily bias. We need to understand the direction of trading. Before we can place a trade, we need to know where market is going to go. That is that simple. I like to call this part of the trading phase one. So I like to break my trading into two steps, right? Phase one followed by phase two. Okay, so what is our phase one? Is our bias. We're finding expected market direction. We're looking for high time frame trends, liquidity sweeps. We're looking for previous daily highs and lows, session liquidity getting taken, as well as paying attention to news events, right? And when we do find that direction, right, it's going to be something like expecting bullish directions, expecting bearish directions, or momentum or movement. And that is the only type of trade we're looking for, right? So I'm going to break down this today, but I just want to make it very, very clear. So let's say we go ahead and sweep a low, right? We do a liquidity sweep to the low, sweep a low. We're looking for buys, right? While looking for buys, we are only looking to take buy trades. We're not looking for sells within the buy after we sweep liquidity going to upside, right? Looking for price to displace to the upside. We're only looking for buys and vice versa, right? So in this situation, let's go ahead and run through it, right? Let's go ahead and run through it. So this situation specifically, we start off on, let's say, our hourly, right? Because like I said, we look for our bias and our direction of our trade on these higher time frames, the 4 hour to 1 hour. And today's trade was framed mostly around session liquidity, not necessarily the high and low liquidities, but the session liquidities, right? And using what I like to say was confirmation or confluence between pairs. So when you're trading other pairs that are not futures, you're obviously going to have to either find pairs that are things or currencies that are correlating with that pair. But in this case, trading the futures, you have NQ, ES, and YM, and these three correlate with each other. So you can use that to actually find the direction of market within each other as well. So right here we have NQ. Let's go ahead and shift to YM, right? So like I said, for today, YM was taking out these session liquidity areas. As you can see, we took out London low, we took out Asia low, right? Okay, so we took these lows out. Now we can get our hands from under our pants or wherever you put your hands when you're not taking a trade. And what are we looking for? NQ, right? Because that's where we're actually taking our trades. Make sure you're only trading one pair, right? It's going to allow for more consistency over time. So don't take the trade on NQ one day, on YM the next day, on ES the next day. Stick to one pair, stick to one session, stick to preferably one trade a day as well, right? Okay, cool. So we know we're taking liquidity on YM, but we're not taking liquidity on NQ. Okay, this is also something called SMTs, but that's unimportant for this situation, right? You're gonna pay attention. It's gonna play a part on the lower time frame, but not primarily for the direction of like our entire direction, right? But it really is our direction, right? Because SMTs, okay, let's just break it down real quick. SMTs are pretty much just price taking out a level, a low liquidity on one time frame, on one pair, while it's not doing that on the correlating pair. So like we said right here, YM is taking out these lows, right? But NQ is doing the exact opposite. right? It's not taking out those lows. So that's also giving us bullish direction. Okay, so that's one thing giving us bullish direction. But the main direction was the fact that YM took out Asia lows, London lows, and then we drop into our lower time frame. Okay, we're expecting bullish directions, right, with this SMT right here. So we have bullish directions just because YM and NQ are doing what I said, like not what I said, but what I just explained, where NQ was not taking out these session liquidities, but YM was, right? Okay, cool. How else do we further this? What else can we stack on this to give us a reason to take a trade? We have an SMT. Okay, so SMTs, like I said, are times when price is taking out certain lows in the market, certain areas of liquidity. Liquidity lies at every down and up and a down, every high, every low. Like I said previously. So as you can see, we're taking out this low on NQ, while that same YM, which just took out these liquidity points, right, did not take out that low at around that time. You see that? So this low doesn't get taken out, while on NQ, those lows are ran through. Okay, cool. So now we've swept a session low. We've put in an SMT. So we have two directional confirmations, right? Okay, so SMTs, by the way, just a little hint for y'all. We only look at them on the 5-minute chart and up. Anything below that, we are not paying attention to it. But yeah, so this can also give you your direction on the 5 going upwards. So the 5 is really just because it's like an immediate SMT, right? So it's obviously something that's happening immediately, so we can take advantage of it immediately. But preferably for like just full on direction, we will use the SMTs on the higher time frames, like the 1 hour, the 4 hour, like I was saying before, right? Higher time frames have higher power. But in this case, we're stacking that, right? So we're taking session liquidity while putting in an SMT. That's two reasons, right, for price to continue in bullish directions. So, okay, cool. After we found our directional bias, what now? We're dropping into our lower time frames, right? A 3-minute, 2-minute, 1 minute, right? And as you can see right here on our 1 minute, now we start to stack our confluences. So let's start looking at it, right? Okay, we're inside of our session. Check, we're good to trade. We already have our directional bias, right? YM takes out Asia session and London session lows. NQ does not. We put in a 5-minute SMT. Okay, perfect. So we're getting all these reasons. Now, what do we start seeing? Displacement to the upside in the direction that we want to trade in, right? Because our bias is bullish, meaning we are only looking to take buys, right? We get a fair value gap right there. We get price breaking above, not this pair, right? But let's go ahead and look at it. ES, okay? This is correlation again, right? So correlating, being able to look at multiple pairs to draw a singular story, right? So let's look at it right here. So liquidity sweep, this is going to be a model, right? But like I said, we're only trading NQ. So even though it's showing up here, we're not going to take it here because we're only trading NQ, right? But we can correlate the fact that it's happening to NQ and take the trade on NQ, right? So we have liquidity sweep right there. We have a break of structure. So what does that make this green candle? This would make this green candle our what? Breaker block, right? Breaker block inside of what? Fair value gap. Ideally, we're taking a trade like this, right? If this was us taking trades on NQ, right? But this is ES, so we are not taking the position simply because it's ES. So as we can see, we can then correlate this breaker setup, this model, right, to NQ and be like, okay, so what are we seeing on NQ? We didn't break this structure, which is fine. Okay, as long as we're breaking structure on ES, we're good because ES is clean enough to give us breaker setups. Okay, so keep that in mind. This is something called sentiment, market sentiment. We know, and this is proven, ES is a cleaner moving pair. So we can trust ES's price action. So ES is giving us that breaker, giving us that model. All we have to do now is correlate that singular fair value gap to ES, right? Because we already get the direction. We already within time. We have that fair value gap. This is the 1038 fair value gap. Let's correlate that to ES real quick. And what do we get? Okay, fair value gap also enters at ES, exactly where we're expecting to take a trade from. What does that mean? We can then go ahead and take a trade within NQ. That's exactly what we do. Take our trade, place our stops at the low, right? Targeting a 1 to 1.5. And look at that. We are literally ticked into this. Price runs to our favor damn near in what, 3 minutes, right? We're out the trade. We move on with the rest of our day. Okay? That is us incorporating daily bias into order flow, into actually executing the trade, right? Cool. So we're going to look at more and more examples, and then we're going to go over the entire system. So make sure everything clicks and combines everything effectively. But first, let's break down daily bias some more, okay? So this was just an example to show how we use it in real time. But let's talk more about how we're going to actually use this daily bias to understand the flow of orders, right? So we know we want price to run these levels. Okay, cool. So what happens when price runs these levels? We can look for two things, right? One of that being obviously, as you can see, SMT, right? That's one of it. So we can look for three things. SMTs, we can look for high time frame gaps, right? We can also look for what? SMTs, we can look for high time frame gaps, and we can look for something called a Judah swing. I will get into that within a second. Okay, so first I want to give you a high time frame gap example. So it looks like we're going to have to make these changes first. Cool. So first thing we're going to do is change this to 100 so that I can give you effective backtesting when it comes to finding these positions in the first place. Then another thing you need to add to your chart is going to be the times for the Judah swing. So our Judah swing is going to be incorporating time into finding an actual position. Okay, so we're going to turn on two of these, right, within opening prices. We're going to change this into the NY, not New York, actually. We're going to change this into the midnight open and the New York session open. Okay, great. So then we need to set these times. So the midnight open, might have to take a look at my other one just to make sure this is fully accurate. Give me 1 second. Move that over there. Okay, so the times for that is 1 o'clock right here. So this is 1 o'clock and this is 1:01. And then this is the 9:30. And this is 9:31 right here. Okay. So what this is simply going to do, it's going to poke here two dotted lines on our chart. Hopefully they're already set to be dotted. Perfect. So this is what we're going to use to indicate that Judah swing that I was speaking about. Okay. So let's get back into it. First one we want to find is high time frame gap. And how this is going to work is this. I'm going to write it out for you simply. Okay. It's a little flow chart. So phase one, and then we have phase two of our trades, which is actual execution with confluences. With the confluences that we learned, right? And our phase one is going to be our liquidity, right? So drawing our liquidity, draw on liquidity with those highs and lows, looking for price to take out those levels and then execute, as well as this is a minor, so this is not the major part of it, but this is a minor part of it. But our major part of it, right, is going to be us finding the session liquidity that's already populated on our charts, right? And then looking for these two brackets, which is going to be price either taking session liquidity and giving us, while inside of a high time frame fair value gap, or the Judah swing, which has to do with those new times that we just added to our chart. So as you can see, we have these dotted lines, the midnight, right? And then we also have the New York session open and the midnight open times. And I'll get into how that plays a part into what we're looking at, right? But first of all, let's look at these not the Judah swings. Let's look at these high time frame gaps. Okay, so our major form of phase one is session liquidity, looking for high time frame gaps as well as Judah swings to then execute phase two, which is looking for that breaker block, fair value gap to stack for our entry confirmation, right? Okay. So let's look for an example. So what do we want? We want a high time frame gap to exist within price tapping into a fair value gap. That's it. Not a high time frame gap. What we want a session liquidity to exist within price tapping into a high time frame gap. Okay. And this gets very, very dicey depending on the markets you're in, right? So you might get more of it in the Forex markets. You might get more of it in the futures markets. It just depends on where we are within price, right? So as you can see right here, I'm really, really looking. But here's our first little example, right? So within this 1 hour chart, we have ourselves a fair value gap that exists right here, right? Okay. So within this fair value gap, what is happening? Price is then tapping into this gap and then sweeping out London low while we are inside this gap. So remember, originally we would what? Have this as a form of liquidity get swept and then look for price to go up, right? Now we're going to incorporate high time frame gaps. So us just taking this is not just a reason to buy, right? That's the first step of a reason to buy. We're taking the session liquidity, but we're also inside of a high time frame gap. This is now giving us the direction. So once this happens, this is okay. My motive to take a trade. Does that make sense? Okay, so now we have our reason to take a trade. We can get off of our hands and go into lower time frames and try to find our model, fair value gaps, stacking on our breaker blocks. That is how we are taking these trades. Okay, so that's an example of that. Now, Judah swing. I want to show a Judah swing example because I have one from my trade on Tuesday, which I'm also going to play back for y'all. So where's Tuesday that just came bashed? It was on NQ because I only trade on NQ, like I keep telling you. So where's Tuesday? So Tuesday's right here. Perfect. Okay, so coming into Tuesday, what are we seeing, right? We go ahead and where is my... Okay, let's go ahead and do a couple things. First, let's drop down to our 5 minute and draw out our macros, okay? Because like I said, time comes first. With no time, there is no trade to take, okay? So here we go. Drawing out our macros, the 950 start. And like I said, we could skip the close. We could skip the open of the next one and then draw the close of this last one. We could skip the PO3 because it's all included within this time block right here. Okay, so perfect. So within this time block, what exactly happens, right? So on NQ, nothing much, right? You see all the liquidity zones are below us, right? You're like, okay, these aren't getting hit. Nothing's getting hit over here. So what's Vic talking about? What's this all about? Okay, what else did I tell you we have to do? We have to correlate pairs, right? So back to good old YM. 5th of May. What's happening on the 5th of May with YM? This is Monday. This is Tuesday. Where is our previous daily high? Okay, so it wasn't YM, it was ES. Okay. 5th of May. There we go. So you gotta look around, right? Like I said, there's a lot of switching, but the stuff stays the same. Look what happens. We hit previous daily high within that session, right? That 950 to 1110. We go ahead and take out previous daily highs. Cool. So we take out previous daily highs. We know that we want to look for something, right? So we're looking for what? We already hit session liquidity. Now we're looking for either a high time frame gap to stack or the Judah swing. And in this example, what we have is the Judah swing. So as we can see, there's not going to be any high time frame gaps to our left, but obviously make sure you do check by jumping into the 4 and the 1 hour. See if there's anything stacking that has not been mitigated, right? And is not BPR'd. Because like I keep saying, everything we're learning is stacking together. We do have to pay attention to all of that, right? Okay, cool. So like I said, in this case, there was no BPR, there was no mitigated gap, there was no unmitigated gap either. So we couldn't do session liquidity and high time frame gap. But what we could do was session liquidity and possible Judah swing. So let's see, what is the Judah swing? Judah swing is very simple. It's these two things that are already pre-drawn for us, the New York session open, as well as the midnight open for that day, right? Okay, cool. So that was last year. So this is the one for the New York session for here. It's the midnight open from here. Okay, cool. So what are we learning from this? When price hits a high time frame gap, not a high time frame gap, when price hits a session liquidity and is above both the New York session and the midnight open, right? We can anticipate sell directions. Now, I know what you might be thinking. Wait, but we kept buying. Where did you find your trade? Where did you take a trade? We'll get to it. You just need to remember what I'm showing you here and keep this in mind. This is the general rule of thumb when it comes to finding your direction using session liquidity and the Judah swing. So the swing is the fact that price is hitting that liquidity point above, while it's above the New York session open as well as the midnight open. Okay. Cool. So we're already anticipating what? Sell directions. And obviously it would be the opposite if we hit like a low, right? So if we had came and hit this low, right, we would be right here. We would be below the midnight open and below the New York session open, meaning we would be anticipating buy directions, right? So nothing too crazy. So boom, let's just say, okay, cool. Let's just say this is literally what happened. I will show you the execution in a little bit, but long story. Oh, okay, good. Hopefully I didn't close that out. Perfect. Okay. So long story short, we went ahead and found our initial direction. Okay, cool. And remember, this direction happens as soon as this happens. So this is right here. So we're not worried about all this. Guess what we can worry about? This initial leg, right? Because we're taking our trades on lower time frames. So we've announced our direction. Cool. Now we're going to do what? We're going to drop into lower time frames as well as correlate what we're seeing with the actual pair that we're going to trade, which is NQ. So cool. Dropping into this, we're now what? Into our 1 minute chart where it looks like all my executions are taking place. Isn't that right? But regardless, long story short, we're on this lower time frame. What are we starting to see? Okay, cool. Our direction has been found, right? Our phase 1 is done. Time for phase 2. Time for the reason to take a trade. Okay, cool. So we found our direction. What are we starting to do? Down and up, we close below it, we break structure. Down and up, we close below it again, we break structure, right? Down and up, we close below it again. And guess what we do again? We break structure. So now we've broken structure 3 times, right? Which means we have a couple breakers here, right? Since we're moving to the downside, it's red candles. So that's a breaker. That's a breaker. Right? Up and a down. We didn't sweep the liquidity, right? This is just the breaker structure. So there is no breaker up there. So now, as you can see, we can start removing redundancy, right? So these 2 breakers are overlapping, which means we can remove this one right here and just leave this one present. Okay, so cool. We have our breaker, right? By identifying this up and a down getting taken out, this down and a up getting broken through, right? What's next to find? Our fair value gap, because we need that breaker and fair value gap to stack to actually give us an entry. Cool. So within the fair value gap, we could take shorts, targeting what? Low hanging fruit, stops at above the high, right? Cool. Now, we're not taking a trade on here. Why? Because this is ES. We take our trades on NQ. So now we need to correlate what we're seeing right here to what's happening on NQ. So let's go ahead and do that. And the best way and easiest way to do this, guys, is to have them both open at the same time, which you can either do by just like Control Alt Delete on like this actual tab, open another tab, and it will be like, ES and NQ, and you can, put them side by side to each other, or you can get, what's these people thing called? You can get the pro version of TradingView and also have multiple layouts, up to you. But let's go ahead and go and correlate that to what we see right there. I'm just going to put this on 930 so it can take us right to the session that we are looking at. Okay, perfect. So let's correlate that. So boom, similarly to what's happening around that time, right? Should be right about right there. Cool. We have an up and a down getting swept, down and an up getting broken through, meaning this red candle is our breaker. This is our fair value gap right here. And guess what we can do? Take a trade on on NQ, right? Which is the pair we want to take the trade on in the first place. Stops above the highs, right? And as you can see in this case, well, I haven't told you where to put your stops yet, which I'll do later, but just for right now, stops above the highs. Okay, cool. So boom, this is the trade, right? Now you might be like, okay, wait, but we didn't actually run TP. What's going on here? Same thing, like I keep saying, we are correlating pairs, right? So we didn't run TP on NQ, but what did we do on ES, right? Where is that? 5th, there we go. So we didn't run TP on NQ, but we ran TP on ES. See that right there? So what do you think we're going to do as soon as we take TP on ES? You guessed it. Hopefully, you better have guessed it. We are closing out of our position on NQ. Okay, so at 5 o'clock, not 5 o'clock, on the 5th for NQ, even though our TP is down here, as soon as we take that low on ES, we are closing out right there. So we're closing out just before we hit TP. And as you can see, price goes ahead and does what? Reverses, right? So we got to make sure we're correlating these pairs, because this could have easily been some form of a loss, but we are not taking a loss. Why? Because we know what we're doing. We understand that price has built out some form of high time frame imbalance, right? And we're correlating with ES to know that we have taken our objective, our low hanging fruit. There's no need to continue being on this trade. ES is going to move cleaner, right? And that's just the facts of the matter, okay? So just like that, we used our daily bias, understanding Judah swings, right? Because guess what? Like I said, we took out that previous daily high on ES. We were above the 8:30, the New York session open, as well as the midnight open on both of these pairs, okay? That's something that's also important. Let me point that out to you, right? So yes, we were above the 8:30 in New York session on ES, but we were also above those two on NQ. You have to correlate that as well. So these two need to match, right? And just like that, we were able to correlate the trade from ES to NQ, take advantage of it on NQ, keeping ourselves consistent by only trading one pair and capitalizing on that as well. Okay. So that's just the general consensus. Everything applies the same way for buys and sells, right? So obviously this was a sell situation. So we were above these two. In a buy situation, we'll be looking to be below these two, right? In a buy situation, we'll look to be below. And yeah, it's not that, it's not that complicated-ish. It's going to take some practice to fully grasp, but that is it, right? And this indicator is making it a lot simpler for you. You don't have to draw this out yourself. You just got to do the other part of it, right? Which is just doing the actual trading, finding your actual phase one, right? Let me show you that again, just so you keep this in your mind and you can actually look back at this. But like I said, there's two phases to taking a trade. Phase one is just finding those liquidity points, highs and lows, waiting for price to sweep them, looking for a reaction from those points. And then phase two is session liquidity, right? Having those high time frame gaps. So us taking out session liquidity into a high time frame fair value gap, or us taking out session liquidity with that Judah swing being in play, us being either above or behind or below both opens, right? So if we're above both opens, we're looking for sells. If we're below both opens, we're looking for buys, and these need to correlate. So high time frame gap does not need to correlate between all three pairs, but the Judah swing needs to correlate between ES and NQ when it's time to take that trade, okay? They both need to be above or below. Then the execution part comes in, which is executing with confluences, and we've gone through that, right? We ran through that. I'll just show it to you one more time. Not really in-depth explanation, but I will just show it to you again. So like I said, model one is literally just a breaker block stacked with a what? So breaker block stacked with fair value gaps, waiting for price to retrace into that gap to then take our position to extra liquidity or our risk to reward, which is 1 to 1.5 or 1 to 2, depending on what your back testing shows, you're able to tolerate. But for me, that is a 1 to 1.5. Okay, cool. So next, we're going to go over everything. We're going to put everything together, right? Pretty much define out the strategy, define the points that we're looking for, define the flow of order, define everything, as well as give out rules, explanations, and how to connect everything and actually make this as effective as possible. And there you go, right? So let's go ahead and head over to that last video. And yeah, I'll see y'all on that one.